serían los sectores, vamos a hablar con Dennis Shen. Sí, ahí el equipo de producción nos va a poner a Dennis Shen, quien es el jefe de todo lo que tiene que ver con la parte macroeconómica de una compañía muy importante que se llama Scope Rating. Vamos a cambiarnos al inglés, pero cuando yo les haga las preguntas a Dennis, que gustosamente nos está acompañando el día de hoy, vamos a tratar de ver cómo se las acomodamos. Dennis, how are you? How you doing? I'm very happy to give you some sort of a space in our cierre extendido de Wall Street. And I think the first question is, how do you characterize, for example, the global macroeconomic outlook for the second half of 2025 that will start next Tuesday? And thank you for coming, Dennis.
Thank you, and a good evening to you and to your viewers.
Thank you.
Yeah, so I think we published an updated outlook on Friday, and in it we detailed that we see slowdown this year. If we're talking about the global economy, then we cut, I think modestly, but nevertheless cut the global economic projection. That's to 3.0% from the former forecasting. That is a reduction of 0.4 percentage points. And that's coming from, in terms of the precedent, last year, 2024, global growth of 3.3%. We see that being followed. So if we're entering 2026, entering the second half of this year, and then entering 2026, then for 2026 at 3.1%. Now, for your viewers, global growth generally varies between, just to provide an anchor, somewhere between 2.5% and 3.5% on any given year. And global growth of below 2.5% is generally what we consider to be global recession. And so 3.0% this year, that's moderate. It is a slowdown, but it's moderate growth. And I think technically, given the circumstances, given the daily significant news that we have, I think it in fact demonstrates a degree of resilience as pertains to the global economy this year. Again, given the developments. Nevertheless, we see the risks for the macro outlook, also the risks for the growth projections, looking over the forthcoming years as generally leaning to the downside. And in that, there are at the minimum 4 factors that might come to mind. The first, to no great surprise, are the tariffs, the tariff uncertainties. And just keeping in mind, again, that for all the on-again, off-again developments, the different deadlines, negotiations, that even the 10% baseline tariffs that have been announced over the recent months, that have been in place over the recent months, on basically most counterparties, most trading counterparties of the United States, as Trump considers what to do with the higher Liberation Day tariffs, which are also being challenged by the courts, in the United States. That even those 10% tariffs are very high, are at the minimum unprecedented in the recent decades. Secondly, there are risks as pertains to financial markets and financial stability. If we also take into account the financial market deregulation that we've seen more recently. Thirdly, in addition, we are in this ecosystem of more significant government deficits and government debt and challenges as pertains to sovereign debt sustainability. Finally, I also would note the geopolitics, that we are in a different geopolitical environment. That can be Ukraine and Russia, that can certainly be the Middle East. We've observed this escalation and then de-escalation of the conflict between Israel and Iran.
Dennis, it's excellent, all your explanation regarding, give me 1 second, I'm going to tell that in the, en español. Yo creo que una de las cosas más importantes que nos dice Denis, que está en Scope Rating, que para que ustedes tengan una idea, es una agencia calificadora de riesgo muy importante en Europa, y él se encarga de lo que son los mercados emergentes, indiscutiblemente los Estados Unidos. Entonces es una visión global macro de lo que está pasando y de cómo estas agencias, que obviamente tienen jóvenes como él, con una cantidad de posibilidades de análisis de información desde el punto de vista estadístico, desde el punto de vista cualitativo y cuantitativo, y que permiten que ellos traten de pronosticar por dónde va. Pero lo importante es que dice que si la economía no rinde por encima del 2.5%, se considera técnico, digamos a nivel mundial, se considera técnicamente una recesión. Ahora le voy a preguntar a él algún fenómeno que estoy viendo con lo que es la devaluación del dólar y cómo esto puede afectar a la economía americana de manera positiva y lamentablemente seguir poniendo contra las cuerdas a Europa. Denis, you are a global macro specialist, and obviously we are very happy that you gave us some sort of a color, let's put it that way, into what's going on in the emerging markets and in the US. One of the anxiety, Dennis, that people have in this some sort of portfolio construction is the debasement of the dollar, the devaluation by a Fed, and obviously the fact that now cutting rate, it might imply a stronger euro. And in that perspective, what do you think will happen with the economy in the US? I think your focus is emerging market and US, but obviously in your kind of forecast, where do you see that potential and sensitive factor in the model where definitely the dollar might be sliding and sliding more in front of some cuts within either July, September, or October this year?
I think, as you note, that the developments as pertains to the dollar, that has been an interesting development. That generally speaking, within environments in which there have been safe haven inflows, in which we have had these trade announcements, uncertainties, that generally when there is risk off, when there are economic, financial market uncertainties, that tends to be dollar positive.
Yes.
And this year, at the minimum, more recently, because many of these economic uncertainties globally have been centered by the policies in the United States, instead, we've seen a degree of dollar depreciation within that environment, including as pertains to against the euro. And so that's been, again, it's a to a degree, it's a more recent development. And of course, it goes to the to the sort of longer term story as pertains to de-dollarization. The dollar, don't get me wrong, the dollar remains dominant in the global financial system presently. But nevertheless, we have seen this trend as pertains to de-dollarization, which certainly started before the second Trump administration, but nevertheless has displayed further evidence of continuing since the Trump administration, as I referenced this also in terms of some of the recent trends as pertains to changes in the dollar within the recent environment. Nevertheless, of course, for the U.S. economy, that is inflationary in terms of the dollar trends, and at the margin, certainly that also plays into the decisions of the Federal Reserve later on, so entering the second half of this year, in which I don't see there being a significant likelihood of a Federal Reserve rate cut in terms of resuming the rate reductions at the July meeting. Over the course, by the end of the year, of course, there is that possibility, certainly that potential in terms of for the Federal Reserve to resume rate reductions before the end of this year. But much of that also depends on the tariffs, the tariff uncertainties, inflation, also in terms of trends as pertains to the real economy and monetary policy. There's slowdown this year in the United States. We foresee growth this year in the US of about 1.8%. That slowdown does support those that argue for Federal Reserve rate reductions, but at the same time, it's a slowdown. Not necessarily to the point of speaking about US recession. So it supports the argument, but in and of itself, it does not by itself secure rate cuts unless there is further evidence of improvements on the inflation front.
Excellent. And last but not least, we are very happy. And at the end of the day, I'm speechless to see those numbers because obviously I'm in the US and 1.8 scary movie. I think we're going to probably cross the 2% plus. But at the end of the day, you have all the data, all the model, the sensitivity factors that might forecast where we are. And I think is extremely important. And my last question, and we have around 30 seconds then, is what do you think it will be, if anything that can trigger volatility? Because I've seen everybody super bullish now, extremely bullish. And that's where my models are telling me is some sort of a dangerous approach, at least in the summer. Do you see any in your kind of models, any systematic credit risk or anything? I know there is some problems on the private equity sectors with some of the portfolio companies and the financing, and I know we need some lower interest rate, but what do you think on that? And if you can summarize that for us, that would be great, Danny.
I suppose in the second half of this year, I mean, we certainly, in terms of talking about what the risk factors would be to the markets, we've seen such significant volatility in the recent months. Of course, I mean, generally speaking, markets have been comparatively resilient, so taking nothing away. But of course, we've seen sell-off, we've seen corrections, and there's been such uncertainty. But one of the factors, of course, we should never lose sight of, even if no, there are other factors that have more recently been taking over the news flow to a degree. The tariffs, there are uncertainties about that. There are different deadlines that are forthcoming, what Trump is doing on the tariffs, how the courts are imposing themselves, what those negotiations look like, or what the settlements look like. And then in terms of what the tariff rates know, in terms of this on again, off again, how that then manifests over the forthcoming months as these deadlines arise. Secondly, certainly as pertains to, as pertains to sovereign debt, that we're talking about NATO spending targets of 5% of GDP. Now that is a very high number. And going into the other factors, the interest payments, talking about rearm Europe and all this. Of course, there's much of a need for this, but nevertheless, there are challenges that presents over the course of time for deficits, for government debt, and how markets respond to that. In addition, the geopolitics. So there are multiple examples of that, and of course, that presents different risks depending upon what we're speaking about. Obviously, we've seen the recent volatility in energy price markets. And finally, as well, as referenced, that the financial markets, in many cases, valuations remain elevated. And so there is the risk of corrections.
Listen, thank you very much. And obviously the market, as we speak, has been turning positive. The S&P and the NASDAQ has been, well, the NASDAQ has been positive the whole day, but the S&P is now turning positive, and obviously that's pretty good. The Dow's a little bit down, but we hear you. We would like to say thank you to you for all your forecasts, and we want to bring you back probably in the third quarter, sometimes in August, so that way we can move forward with that. Thank you very much, okay? Have a nice day.
Thank you.